Hey guys, what to trade next week? In this video, I'll discuss EURUSD, we'll analyze gold, I will share with you my analysis for WTI crude oil, and we will take a look at US 30 index. I will share with you signals and forecasts for next week. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Alright traders, let's warm up analyzing EURUSD here. We are on a daily time frame, and the first thing to note is that this week was quite bullish for EURUSD. Even though the market opening was very bearish, reaching 95.4 level, the market started to recover, and you can see that here we got very nice and strong bullish candles. And the question is, what is next? Remember traders that our long-term trend is still bearish, yes, and EURUSD is still trading within this major falling parallel channel. And recovering, I see a lot of resistances from where EURUSD may start falling. First of all, traders, right here we have a very strong horizontal structure. You can see that in the recent past, it was a very strong support. And after the breakout, it turned into resistance. And from here, after the breakout, the market dropped sharply. The next resistance on focus will be the resistance of the channel. Yes, very strong one. And definitely it must be taken into consideration as well. And the trend line and that horizontal structure compose a very strong contracting zone of supply. And from that zone, we will expect a bearish trend continuation. Moreover, let me show you one more thing right here. If we take FIBs into the equation, if we take our last bearish impulse, draw the FIBs, and then take that bearish impulse from that high to the current level, take a look, traders. Within that blue zone, we actually have two very peculiar confluence points. First of all, we have a very nice confluence right here based on 0.5 and 618 retracement. And also right here, we have a very nice confluence between 382 and 0.5. So that zone here, that blue zone is major. Not only we have a horizontal and vertical structure right here, but also we have FIB confluences. So your plan traders will be to patiently wait for a confirmation within that zone. Once you spot a confirmation, a bearish continuation will be expected at least to a current level. Bias remains very bearish, and we are looking for shorting. Hey guys, subscribe to my free Telegram channel. Get exclusive forecasts and signals daily. Get exclusive educational material and tips. It is called Vasily Trader. The link in the description below. Subscribe now and let's continue. Now let's discuss WTI crude oil. On WTI crude oil, I see a potential shorting opportunity. On a daily time frame, you can see that we are trading in a bearish trend. The trend is bearish, and setting a structurally right here, the market started to recover. The market bounced, and the price perfectly respected that major falling trend line. Moreover, that trend line matched perfectly with that horizontal structure. And you can see that testing the structure, the market formed there a very cute doji candle. Right? And by the way, when the market was approaching that trend line, we shorted the market with my students 2 times, and 2 times we caught very nice little winners right there. But now, watching the price action, now opening in an hourly time frame. On an hourly time frame here, traders, what we see right here a very cute head and shoulders pattern. I hope you see this pattern right here, traders. This one looks very cute right here. But the main problem with this head and shoulders pattern is its neckline. You can see that here it looks like we have just a small, narrow neckline. But the fact is that that neckline matches perfectly with that horizontal structure here on the left. And returning back to a 4-hour time frame, you can see that here we have a very strong demand cluster. So our neckline here will be wider. And in order to short WTI crude oil next week. We will wait for a bearish breakout of that entire area. We will need a 4-hour candle close below that entire yellow structure cluster. And only then we will short on a retest. Returning back to an hourly time frame, let's discuss where will be our entry, stop loss, and take profit. So once we see a 4-hour candle close below the neckline, we will set our sell limit order on a retest of a broken neckline. Yes, and I guess our entry will be just a little bit higher. Yes, based on the candle closes right here. By the way, traders, if you want to learn my strategy for trading head and shoulders pattern, watch this video. There I explained in details how I trade this pattern. So we will short the retest of a broken neckline. Our stop loss will lie above the head. Because the right shoulder is very close to the head level, it is better to set our stop loss above the head. And our goal, our target, will be a current low. Yes, here it goes. Yes, from here will be our take profit for this trade. And bit higher right here will be our break-even point. So once the market reaches that point, we will move our stop to entry and make our position risk-free. Moreover, traders, remember that we are trading in a bearish trend. We are trading in a strong bearish trend, and the market may drop even lower. If you are a trend following trader, you can also consider applying trailing stop, and you can expect a bearish continuation even to lower structure levels. Everything depends on your expectations. But for now, what we will look for a 4-hour candle close below the neckline, then the retest of a broken neckline, and boom, then we will short. Now let's take a look at Dow Jones Index. Dow Jones Index is trading in a bearish trend, and a very important thing happened with the index recently. It turned out that the market managed to violate a previous low and set a new lower close on it daily. We violated that structure to the downside, retested that, and the next day we dropped. So from such a perspective, the market looks very bearish, and from such a perspective, it looks like the index will keep falling. But I really want to warn you, traders. If we open a weekly time frame and look left at structure, traders, here on the left, we have a very strong horizontal demand cluster. Yes, take a look how important it was for the market participants in the past. Yes, it was a very strong resistance. And after the breakout, it turned into support. And you can see that just recently, the price nicely respected that. So those who want to short Dow Jones, those who want to sell it should wait for a breakout of that entire structure cluster to the downside. You should wait for a weekly candle close, because if you short now, you will short a strong weekly support. Yes, and it is a very bad habit to short the support, traders. So I really want you to wait for a breakout. Once we close below that, then that structure will turn into very strong resistance, and then we will expect a bearish movement to that support. Remember that the trend right now is bearish, and for that reason, chances will be extremely high that the price will break that. But I really want you to be patient, because if you trade it now, chances will be high that you will be stopped out before the market will start falling. Last but not least is gold. And you can see that this week gold bounced nicely. And you can see that this week is very bullish for gold. And many of you asked me why the market started to grow. And on my free Telegram channel this week, I shared my fresh structure analysis explaining why gold is growing. I want to remind you, traders, many times in a row, I showed you a trend line. Do you remember that trend line? This major falling trend line that we were monitoring so many times, and from where we were expecting this bullish movements. And you can see that testing that trend line, the market bounced from that again, even though we got a false violation of that, even though we got a breakout attempt of that and daily candle close below, you can see that it was a false breakout, and the market perfectly respected that. But traders, remember, after a false breakout, the trend line is no more valid. So in our future analysis, we won't rely on that anymore. Yes, so we now remove that. Yes. And the question is, what is next? On focus, next week, traders will be that resistance cluster. It is a very strong structure. Yes, you can see that it was a very strong support in the past. And after the breakout, it turned into resistance. And I assume that a lot of selling orders are placed within that area. So your task next week will be to patiently wait for the test of that. And within that area, you should look for confirmation. Traders, if you want to learn what do you mean by confirmation, please watch this video. There I explained what confirmations I'm looking for to open a trading position. So that zone will be on focus. But if the price violates that for some reason, because of some fundamentals, the next resistance in focus will be that area. Yes, these two resistances will be on focus next week. I will monitor them, and from them I will look for shorting. Remember that trend is bearish. We are trading in a bearish trend, and for now we are looking only for shorting. Buying right now is not an option, and we concentrate on trend following trading. Right? Those who want to buy, for now, the only recommendation that I can give you is to wait for a breakout of that structure cluster. If the price breaks that to the upside, then most likely gold will keep growing to that resistance. Let me know, by the way, in the comment section, what are your expectations from gold next week. Alright traders, let's see what will happen next week. Remember that if you have any questions, if something is not clear in my analysis, you can always ask me here on YouTube in the comment section. I always reply. Also traders, if you want to see more free forecasts, more fresh signals, don't forget to subscribe to my free Telegram channel. The link in the description below. It is called Vasily Trader. Also traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching traders.